Hi, everyone. Thank you for watching today. I'm here with my CPA and bookkeeper, and she's got me on track for literally everything that I've done with regards to my business, because when I came, it was a hot mess. There was I think I was like a year behind in terms of like bookkeeping. It was crazy. So please don't be like me. So she got it together, and now I figured I'd bring her on so that we could talk about what you guys might be facing. And Meshelle, thank you for coming to my new series, the mini series, Mastering the Basics. And can you tell me about you, what you do, how long you've been doing it?
I'm Meshelle Patterson, the owner of Tracking Your Green Tax Services. I am an accountant and an enrolled agent. Enrolled agent is a tax specialist that specializes specifically in tax preparation for individuals and businesses. We also provide audit support with the IRS.
Okay. Scary stuff.
Yeah.
Okay.
So it's a little bit different than a CPA. We handle tax matters specifically. Okay. I've been in business, about 10 years, but I've been doing taxes for over 20 years. Okay, so I started out volunteering doing taxes with a tax ministry, and that kind of piqued my interest. And so, I just decided I wanted to expand and help more.
Let's kind of dig in a little bit. If someone is starting a business, particularly I'm in cleaning, obviously, you know that, but it could be anything. So I was telling you earlier, like before we started, that my siblings have businesses. One's a doula, one is a fashion designer. And I was talking to the sister who's the doula, and she was worried about taxes. And she was worried about the business. And she was like, this is the first time I've made money with the business. And I really don't know what to do with it, but I'm scared that I'm going to owe a lot. And I hate owing people, and they're going to come for me. And that's how I felt. I was like, oh my gosh, I'm going to go to jail because my taxes are behind, and like, I don't know what I'm doing. So, let's start from the beginning. If you are starting a business, what can you say to the person starting the business that's afraid of taxes, and how they can get some confidence?
Well, I always suggest is seeking out help. Setting up an appointment, getting an accountant, an attorney, enrolled agent, because your situation may not be as bad as you think. Mm-hmm. And it's always good to address it head on. Okay. So the more time goes by, then that's what causes issues, because if you had a filing requirement and you didn't file, then you could face, some penalties and things. But I would suggest hiring someone to help you to get things started.
Let's backtrack to before you even, have the company. You had like a little side hustle, and now you realize, okay, I probably need to incorporate or make it a real company or a real business. Like, what are the different structures they can do? What's the best structure? Is there a best structure, or does it just depend on what their needs are?
I would say, so initially when you're first starting out, it is a good idea to kind of get an idea of what type of entity you want to set up. So that goes back to hiring a tax professional or an accountant or, an attorney to help you. So generally, I always suggest coming up with your tax structure first, right? Okay. And the reason I say that is because that's very important in determining, which direction you want to go. There are some things that we have to be concerned with as far as personal and legal liability, the tax implications. What are some operational and administrative complexities that you might face? So I think choosing a business structure is the most important thing, because first you want a structure that's going to give you some liability protection. Mm-hmm. And then you also want to know, how often are you going to have to pay taxes? What's your tax rate going to be based off which business you choose to go with? Mm-hmm. And then as far as administrative concerns, how much paperwork is involved, what type of tax return am I going to have to file, things of that nature. And so I would say that that's the first step, is identifying which type of entity structure. And then the different types of structures that we have is one is the sole proprietorship, okay? So that one is the most simple type of business structure, because first, there's no paperwork involved. You're running the business under your personal name and your social security number. So not really a paper trail there, right? It's pretty cheap, okay. So that would be a pro. I would say the cons of the sole proprietorship would be not having that level, that legal protection. So if anything were to happen,
It's like your responsibility.
your responsibility. Yep. So the tax liability, all the liability falls on you personally.
So if the cleaning company had a sole proprietorship, residential cleaning houses, if they got sued or something like that,
then
it would come after me personally.
We want to separate the two. So then the LLC looks more attractive than the sole proprietorship, because with the limited liability corporation, it separates the owner and the business. Okay, so that's that level of protection that you're looking for. And with the LLC, I wouldn't just rely specifically on the LLC. I would still get some type of comprehensive insurance, to protect you as a business owner. Because within the cleaning industry, there are a lot of legal aspects to things, and
being in people's houses, breaking things, being in businesses, having sensitive information around. Yeah, there's a lot there. So that makes sense. I think I started off as an LLC.
Yep, you started off as an LLC. So we talked about the sole proprietorship and then the LLC. So the LLC, you can also venture off and elect to become a S Corp with an LLC and be treated for tax purposes as an S corporation. So leading into that, we have corporations, and corporations can be broken into the C Corp or the S Corp. So the C Corp, it protects your personal assets from the business as well. Okay, you file a separate tax return with the C Corp, and then you're able to write off like employee expenses and things like that as a tax deduction. Now, the downside is there's a lot more paperwork involved setting it up. Corporate level, you are paying a 21% flat tax rate. And then as a shareholder of your corporation, you may have to pay individual taxes.
And that's just for a C Corp?
For a C Corp, yep. Okay, now then if we talk about the S Corp, your profits and losses, deductions and credits flow down to each shareholder, and there's no tax liability due at the S Corp level. However, you are required to pay yourself a reasonable salary, where you know this now.
Yes, I know this now.
Okay, so where you are going to have to draw, wages for yourself and pay Social Security and Medicare and federal and state taxes. With the S Corp, it can help reduce the tax liability because it shifts that self-employment tax. Whereas if you were like the single member LLC or the sole proprietorship, you're paying the self-employment tax, which is basically Medicare and Social Security. Whereas with the S Corp, you pay it through payroll deductions, but you're going to be able to write off that wage amount on that S Corp tax return.
So why did we switch me from LLC to S Corp? And then the second question is there a certain amount of money you should be making? Like, is it like a profit thing? Like how much you take in profit, you should then switch over? Like when does that make sense? If it's even necessary?
So to answer the first question, you are still an LLC. So
and then operating as
and treated for tax purposes as an S Corp. Okay. So you're still an LLC. And then when it makes sense, different tax professionals have their own threshold. So like I personally don't suggest doing an S Corp if the business is not profitable, showing losses. I generally will suggest that conversion if you're making $70,000 or more in profits. And that's just because you're going to see a tax savings more the higher the profit are because you're shifting that self-employment tax, that's Social Security and Medicare, as the Schedule C filer, which is the sole proprietor or the single member LLC that hasn't elected the S Corp, you are paying self-employment tax, which is 15.3%, and then you're going to pay regular income tax based off which tax bracket you fall into. Now, with the S Corp, that is shifting. You're able to pay, so you're going to pay Social Security and Medicare, but you're going to get to deduct that as an employer. And then you report the wages as income on the individual side. But that shift always seems to be a tax savings for a lot of tax clients, yes, as yourself, yes. So you see a savings because, like I said, you're writing off, your wage amount, you're writing off some of those taxes that you're having to pay. Whereas if you're not the S Corp, you're paying that full Social Security and Medicare portion.
So is there a difference between like LLC filing as an S Corp and then just like being an S Corp?
Yes.
When do you do that?
Yes. So the filing aspect of it, say if you're, the single member LLC, you haven't elected the S Corp, you're going to file that's all going to flow through your individual tax return. So like there's so individuals file a 1040. That single member LLC or that sole proprietor reports their profit and loss on a Schedule C, which flows through your 1040. Where the S Corp, there's a whole separate tax return, a 1120S. It's just a lot more.
You ever feel like you're stuck in this weird limbo where you want to start a business, or maybe you already have a business, but every step forward feels messy or clunky, like you just don't know how to get your footing or how to go where you're trying to get to? Questions like, how do I charge? How much should I charge? Where do I find my clients? How do I secure clients? Or even just where do I start? Trust me, I get it. When I started my cleaning business, I made so many mistakes. Pricing too high or too low, wasting my time on walkthroughs that didn't go anywhere, and not really having a clue how to actually grow. I knew how to hustle, I knew how to work, but I didn't really know how to multiply what I was doing. And I felt like I was throwing spaghetti at a wall, hoping that something would stick. But here's the thing. Once I figured out how to simplify the process, everything changed for me. I realized it's not about reinventing the wheel. It's about knowing the right steps, knowing which steps are right for me and the company and which order to take them in. And that's exactly what this workshop is all about. On February 7th, I'll be hosting a live workshop called the Cleaning Business Kickstarter. It's 90 minutes of focused, actionable strategies designed to help you finally figure out how to price your services confidently so you're not feeling like you're undercharging or underbidding, how to land your first clients without feeling pushy or awkward, and set up the foundation of your business the right way. It's simple, it's practical, and you'll walk away knowing exactly what to do next. Now, here's the catch. This is a live workshop. It's not pre-recorded, it's a live workshop, and it's happening February 7th. I'll only be taking signups through January 31st. So if you want to grab your spot, now's the time to jump in. Don't wait till February or you'll miss the chance. If you're ready to take your first confident step, check out the Cleaning Business Kickstarter. Sign up today, save your spot, and join me live on February 7th. The link is in the description. Grab it before the spots fill up. And like I said, starting a business, particularly a cleaning business, doesn't have to be overwhelmed. You don't have to feel alone. You don't need to have all the right answers right now. You just need to know the next right step. And I'm here to guide you through them together. See you there.
So as you were talking, I was like, this is a lot. I don't want to scare people because that's really like what they're dealing with is fear and why they don't do it. So like we've been talking, obviously you need to know how to do, the things. You need to do it well and do it right because there are implications and consequences for any decision that you make.
Yes.
But is there a way to not make it scary?
I know. I think what got me is just getting more involved and learning, like seeking out the information, trying to learn and understand it. Because once you set up an appointment with someone and you ask questions and find out, it might not be as bad as you think, So getting past the fear of, okay, let me just make the first step. Let me call and hire somebody. Let me talk to someone or seeking a mentor or something like that. But I used to volunteer and work with IRS employees when I was doing the volunteer income tax assessment program. And so I was able to network and talk to different IRS, representatives. And, they're not that's scary. They're people too. They're humans too.
Being with you has like made everything better for me because you do answer my question. It is important to have somebody who will sit with you. And like, even though the information might go over my head, you'll break it down so that I understand it. And then having your company as a bookkeeper, the best decision I've ever made, the best money spent every month. Okay. It was also, we deal with a lot of baggage when it comes to money. And so I had a hard time with checking the bank balances and making sure, I didn't even know how to read a P&L for like the longest. So having you as a resource, like knowing that you're looking at my account, even if I'm not looking at my account, and one of us will figure out if something is off. It's like having that there and then being able to sit and talk to you has made it like, so like you're saying, asking questions and having someone you trust doing it with you. What are the implications if they don't find someone?
I've met a lot of people that have started their own business. And for example, they will set up their structure and they elected to be a partnership. Now, they didn't know that they set it up as a partnership. So when they created their employee identification number, they selected 2 or more members. And so they, in their mind, or they didn't know that there's a different filing requirement when you select partnership. Because so when they did that, the IRS expected a 1065 tax return to be filed, where they were filing just a regular Schedule C that flows on the individual 1040 tax return. Okay. And so time went by and they were not aware that they were a partnership. And so now the IRS sends out a notice or a letter and it says, hey, you have not been filing the correct tax return. We're going to charge you a penalty per partner for this partnership that we have not received the tax return on. And so if they got help from someone, then they could have been filing the correct type of tax return, or they could have been educated on which type of entity structure, to choose. And so I get a lot of people like that are filing the wrong type of tax returns and they are not aware. You save money overall when you get things set up correctly initially. Yeah, because it can be a headache. It can be a headache. And so a lot of people are worried about, hey, I just started this business, I'm trying to keep my costs down. I don't have a lot of money to spend, or I don't want to spend a lot of money. I don't need to pay for, accounting services. I don't need any advice. I can figure this out on my own. But sometimes you do need help. And so I would say seeking advice up front initially is the key, making sure that everything's set up correctly.
What's the first thing that comes to mind? If you could give anybody starting out, or even who's had their company but never had a tax, professional working with them, what are the things or the thing that you think that they really need to know right now?
Number one is commingling. So a lot of people that set up their business, they may not understand that the business needs to have its own separate bank account. So when you set up your business, you want to set up a business bank account and track all your income and expenses in that dedicated business bank account. You don't want to mix it with your personal account, okay, which is called commingling. Okay. And the IRS frowns down on that. So you want to keep things separate. Okay. And then the other thing is I get a lot of people that come in, they say, I have a business, I need to do my taxes. And I'm like, okay, what records do you have? How much have you made for the year? Or what type of expenses have you incurred? No. And so we need some type of accounting system. Now, a lot of people are familiar with QuickBooks. It's online. You can pull it up, from your phone, from a tablet. So some type of accounting software, whether it's QuickBooks or even Excel, where you can track all the income that comes in and all your expenses. Okay. And so, of course, QuickBooks requires a human to touch it, and so, but it is a system that can be used, which can help you throughout the year. And so most important is that separate business bank account where we can track all the income and expenses. Okay. And then keeping good records of everything. So let's say
everything. So
I would say bank records, receipts. If you use QuickBooks, you can download the app where you can snap pictures of your receipts and upload them into the software. You can scan your receipts and save them. The reason why I say saving receipts is in the event that you ever have to prove or justify anything, receipts are a good source because they identify what was purchased, the date, and so that'll be the first thing that's checked. If you don't have that, then the IRS will look at bank records. Okay. But you can get an idea of what was purchased with receipts.
How far back then do you have to go with the receipts? Like how long do you have to keep records for?
So it's documented at least 3 to 5 years. However, if you come up with a system where you're able to scan and save everything electronically, I scanned everything and I just keep it indefinitely. For good record keeping, you never know when you need to reference back to something or if anything, occurs. The other thing is people don't know that they can write off automobile expenses. So it's very important to track your mileage and expenses.
I know you can do that with QuickBooks too.
And so
this is not sponsored by QuickBooks, by the way.
So QuickBooks allows you to track your mileage. So there's a mileage tracker on there. You can also use another app called Mile IQ.
Yeah, I used to use that too.
Yeah.
And that starts automatically, like when you get in the car.
Yep. As soon as you get in your vehicle, if you have that app turned on, you can swipe, left or right. If it's business or personal, you can put the purpose. So that's another thing that, a lot of clients miss out on, or they're not tracking. It's like, mileage and automobile expenses and things like that. The other thing I want to point out is, let's say you are running a business and you have someone helping you, like you hire some people to do some work for you. Now, they're not particular employees, but they're just, like maybe another company or another individual that you hire to, perform some services. So what we need to do is start keeping and collecting a Form W-9, which will collect their information. So if it's an individual, their person, like a name, their social security number, and their address. If they are an LLC or some type of business structure, created, that they have created, then you're able to capture their LLC name and their EIN number and things like that. And this will help you generate the information that you need to issue them a 1099 if you pay them over a certain dollar threshold. So I have a lot of people that will have hired people to do work, but they don't have their contact information. And so that's very important, because then it becomes my responsibility to pay the taxes for them. If you do not, so if you pay someone $600 or more, then you are required to issue them a 1099. So let's say you didn't collect their information and you didn't issue them a 1099. Then IRS says you're not entitled to that deduction. And so we want to make sure that you're keeping records of that information. So you can get your tax deduction. I wanted to ask you, within that, what's the difference between having an employee or like having a contractor do the work? Like, is it like okay to to treat people as a contractor, or when do they have to become an employee really? Okay, so the ideal of it is if you are controlling their schedule, if you're providing all the resources, then they're an employee. But if you are contracting the work out and they come on their own schedule and they're using their own resources, then we deem them as a contractor. It's important for cleaning businesses because it can get a little murky. Having different contracts depending on we have various contracts, and some of my people are contractors and some of them are actual employees. And I found that if I want more control over how they do their job, what they use on the site, how they show up to my sites, they have to be an employee. But there are other jobs where I'm like, just, know how to do the job. You are cleaning something. You can go ahead and do it. Or the site provides resources and equipment or chemicals. I just got to send somebody. I might as well just send a contractor, because there's very little oversight that I have to have there. They'll just have a checklist of what they need to accomplish. How they do it, I don't necessarily care. I trust that they know how to do the job because I hired them. So does that work that way? Okay, so your next thing was the... Okay, and then I was just going to add, for new business owners, so there's a concern how much taxes, am I going to owe? How much money do I need to set aside? Do I need to send in quarterly estimated tax payments? And so that's, again, where I would say if you hire or talk to a tax professional that can do a tax plan for you, where you get together and go over all your activity for the year and estimate this, and you don't have to wait until tax season. You can kind of get ahead of things and do it early on. I always suggest putting money to the side, at least 25 to 30% of what you gross. So if you do that, what you gross, you'll have more than enough. Or you can... It feels like a lot when you're starting out. So I want to keep all my coins. It definitely can appear to be a lot. However, if you save it in small increments versus having to come up with a lump sum, it seems a little easier. Thank you for coming.
thank you for doing this with me. I really appreciated everything you said. I think that you're phenomenal to work with. You really are, because I don't know any of this stuff. And it is scary when you first start out, like I said before. And I think the fear comes in the lack of knowledge, just like you were saying. So having more knowledge in this case can help make people feel more at ease, because they feel like they can create a plan, they can have a strategy, and they're just not being caught off guard. Like, oh crap, I owe all this money. And so I think moral of the story is find someone like Meshelle. If you're in the Missouri area, then you can come to Meshelle. I'm sure she'll take you if she has time. Do you want me to tell your company?
Tracking Your Green Tax Services.
Okay.
And I can service any state. I do a lot of virtual, work as well.
Okay, so any state, wherever you are, Track Your Green. I'll put it in the description below, and a link to your website.
Yes.
And then you can talk to her, because she's the best that I know, at least, and so, yeah, I appreciate you being here.
Definitely, no problem. Thank you for having me.
Of course, this was fun.